Well, the sensex, nifty and the nifty bank are back in the red this week, recording losses for the second straight week in a row. On this week's edition of the Editor's Roundtable, we take stock of the markets. We tell you all about the key developments in the Indian stock exchanges and put the spotlight on the big event upon us, which is the Cricket World Cup, and the impact it would have on your stocks. That's not all. We also tell you about the US government impending shutdown and what could transpire if that takes place. I'm Sonia Shana, and joining me now I have Reema, Ramesh and Prashant with us. And in a bit we'll get our editor in as well. We have Ramesh Mantri, who's joining us, the Director of Investments at White Oak Capital Management. Lady, gentlemen, all of you, I mean, it's been a tough week for the bulls, right? We've had these global pressures. You have Brent crude prices at $95 plus. There's been FII selling. But now we're finally heading into the long weekend, so everyone can take a bit of a breather.
Yeah.
I think Friday was good. Actually, the last 3 days, right? Wednesday, Thursday, and then Friday. Wednesday, we saw that big bounce which came through, 200-point bounce. Thursday, there was a 200-point sell-off. Yeah. And that is, today we had a 200-point bounce. So, I mean, actually, I was just, Ramesh, hi. I was just asking Ramesh, क्या लगता है? You know, तेजी लगती है, मंदी लगती है, कुछ नहीं लगता है. And Ramesh was telling me, कुछ नहीं लगता है.
It all evens out, right?
We still perform better than the global markets, right? Yeah. Given all this.
No, and let me just actually put a few points on the table because I think it's very tentative. So oil, yields, and dollar are the three things which actually have been working against us in a very strong fashion, right? I mean, multi-year, actually decadal highs on some of these things. Oil nearly at 3 digits. So we got the first sign on Thursday that maybe these things are starting to cool off a little bit. Some signs of exhaustion, which is great news. We need these things lower, not higher, and we'll find out. Now, very near term, you got, so in the US, the big talk has been whether data is heating up, it's slowing down. So we get a very important data point, which is the PCE number, inflation number, that is today on Friday, which will kind of, I think, add to that debate. And of course, Reema was pointing out the US government shutdown, which is impending. Hopefully, when we come back on Tuesday for trading, the US government would still be functioning. Market consensus, right? And it almost had become a consensus that we are heading into a Goldilocks economy. We'll get a soft landing. At the margin, that is starting to fade. People are not so sure anymore. Jamie Dimon, for example, he was on Shirin interviewed him earlier this week, and he kind of made that same point. So people are not so sure whether we'll actually get that. Remember, Fed has hiked interest rates by 475 basis points in this particular cycle. Can it be that we get a perfectly nice, softish kind of landing without any troubles? We don't know. I went back and looked at the 2006-2007 period. Interest rates were hiked by 425 points back then. I'm not suggesting, I mean, both periods are exactly similar and we'll get a repeat. But, I think some caution perhaps is warranted. We also get into the second quarter reporting season, right? Which I think is going to be important. Remember, Q1, after all is said and done, was not spectacular. It was okay. It was not spectacular. There were lots of earnings downgrades, etc., for full year estimates. So I think the best case, according to me, is, if you ask me, maybe we stay ranged without those animal spirits and the galloping higher market. That perhaps is unwarranted at this point in time. Limited downside, but no real sort of not a galloping market. The spirits have
cooled off a little bit. Ramesh, you want to come in on that? Thank you for joining us on the show.
Yeah.
The market, do you think is just taking a bit of a breather before the next leg up, or is there something to be cautious about?
See, we have seen very strong momentum in small caps and mid caps, in the last 6 months. And large caps, of course, have, which is a risk-on environment in a way when small caps and mid caps significantly outperform. Some of the macro at the margin, as Prashant pointed out, is deteriorating, right? And so it may be a good time to take a breather on this. The markets have run up, and particularly in small cap and mid cap, you've seen some elements, some sharp movements, very sharp movements in markets. So it's important that you see some rationality coming in some of these segments. I don't think we've seen concerns on the large cap side where the markets have been more normal, right? So I think the problems, if they emerge, they will emerge probably in select pockets in small and mid caps.
In fact, Ramesh, your both flexi cap fund and mid cap fund has completed 1 year and done really well. I guess it's to do with the markets as well. But broadly, how are you positioned in the mid cap space? Which are the sectors that you think are an avoid right now?
So I wouldn't call anything avoid because we are bottom-up investors. But one, of course, where we are invested larger in the mid cap particularly is on the capital goods size. So you have the India capex story that's playing out, but you also have the China plus one playing out, and also a possible longer term manufacturing renaissance in India. So all of these through, and we are seeing some very small companies growing at very fast rates. For example, electronics manufacturing. Very early, there is a big global story of the fact that electronics shifted to Far East, in the last 20 years, and now probably they're going to shift to India. And of course, the global geopolitics helps India. So there are these sweet pockets where you have growth. And then financials in India, we're going through this great cycle where, growth is good. At the same time, credit costs are low. So it's a good time to be in financials and across the board in financials.
Just to take your point forward on EMS, you spoke about the electronic manufacturing. I know it's a big story. There is a huge potential opportunity for India and the Indian companies. But if you look at the valuations, nothing is available less than 60 times, 70 times. So as a fund manager, how do you justify when you get exposure to these companies?
Yes, so one, there's been a massive re-rating on EMS companies, and now they started trading at what you call much richer valuations than they were 2-3 years ago. Now you have to get selective, and I think the whole concept has to be ability to deliver. So, I'm going back to the tech cycle. You have lot of companies, tech companies, and finally Infosys, TCS, HCL Tech emerge. The idea is you figure out those companies, bottoms up.
Well, all this frenzied activity, trading activity has meant that exchanges are doing very well. And I think you're putting the spotlight on one leader in the commodity space, MCX, and one second player in the stock market.
I'm actually putting the spotlight on the exchanges, and the reason is MCX was clearly the newsmaker of the week, right?
Yeah.
We've seen a big move in MCX on the back of the transition to the new platform. So I thought, let me just go to the wall and explain what the exchanges have done this year and why, while MCX was the newsmaker of the week, but the bigger mover has come to the surprise on the Bombay Stock Exchange. Within the exchange stocks, the first big mover was BSE. Just look at the BSE stock move. This month, the stock is up 45%. And in the last 6 months, the stock has nearly doubled. It's up 200% in the last 6 months itself. That is BSE. Now, what has worked for BSE in the last few months? The biggest takeaway is that the equity derivatives growth that has really picked up after they launched the options in March or May. And since then, the option turnover growth has been 86% week on week for BSE. And that's been a big trigger as to why the stock has really done well. So what are the triggers going ahead? What are the things to watch out for? The next big thing to watch will be the launch of the BankX future from mid of October. They're going to launch on October 16th is what I understand. And so that's one trigger to watch out for. Need to see how the momentum continues in the derivative segment for BSE, which is they're a new player there. The new businesses can add to the future growth and the tariff increase, because that's something which will add to the PBT as well for BSE going forward. Remember, BSE only charges 500 rupees per crore versus 3,000 rupees that NSE charges. A word on the valuations though, BSE is now trading at almost 43 times on an FY24 price to earnings. So it's not cheap stock now, but the momentum is what is helping BSE to do well, and that was the biggest outperformer within the exchange names. Now look at just look at the brokerage calls. IFL has an ad rating with a target price of 1530 on BSE, and HDFC has recently put out a note. They also have a buy rating with a target price of 1230. So that's BSE in terms of what brokerages are saying. Now coming to the newsmaker of this week, which is MCX. That stock is up nearly 25%. In fact, this week itself, it's up more than 20%. And in the last 6 months, the stock has rallied nearly 40%. Now, the biggest reason for the MCX, or the big overhang for the stock, was the transition to the new platform, which is the TCS platform. And remember, they had extended almost for a year now. And now finally, it looks like they're going to shift to the new platform on October 3rd. I guess there could be some further delays, but eventually it looks like that's a done deal now, and they will shift to the new platform. So that's a big trigger what MCX is watching out for. Going forward, the big triggers would be the option volume and the premium growth and the tech transition, because tech transition would mean that they will be making money going forward. So December could be the last worst quarter, and after that you can see a big jump in terms of the EBITDA margins as well for MCX going forward. So in terms of valuations, currently it's trading at close to 23 times on an FY25 price to earnings. So that's the valuation picture for MCX. In terms of brokerages, recently there was an HDFC Securities note. They have a buy rating and there is a target price there to 2400. So people are turning bullish on MCX as well. The last of that lot is IEX, and that is an underperformer within that pack. And there is a reason for that. This year, the stock is on 5%. Even in the last 1 year, the stock is on 5.5%. So it's a massive underperformer compared to the other names. Now, why IEX has underperformed. One, the competition has increased massively with the introduction of the 2 new exchanges. And the second thing is the introduction of the market coupling, which would meaningfully mean that the volumes can go to the other exchanges, and that's been a big drag for IEX, and that can continue as well, is what most of the brokerages are saying. In fact, if you look at the brokerage call, I think there was a Nomura note, and they have a reduced rating with a target price of 127. So that's what it is. And most of the brokerages are negative on IEX. So that's the call on the 3 exchanges. The biggest mover was BSE, up 200%, but the newsmaker is MCX, and that's something which investors are going to focus on in the weeks to come.
All right, Nimesh, thanks very much for that. Ramesh, any thoughts? Do you own any of the exchanges?
The publicly traded exchanges, we don't own any of them. Exchanges are great business models. They're practically a toll on the financial system. They just participate. And typically exchanges end up being monopolies. That's globally the way, because liquidity drives liquidity. In India, there's of course a regulatory move to ensure there's adequate competition in the exchange markets. And in the last 2 years, massive growth on exchanges has come through the options products, whether the stock options or the commodity options. We have seen regulatory moves in various, and who are trading the options at the margin? People below the age of 40 in tier 2 cities on mobile apps. That's the incremental marginal user. My worry is many of them can't tell a difference between a gaming app, a Bitcoin, and a stock option. Because the young people in tier 2 educational, financial literacy is still a challenge. So we've already seen regulatory actions on cryptos. We've already seen, the gaming companies get impacted because of change in GST. And the fact that the regulator put out a paper that said 90% of, investors lose money on stock options.
Yeah.
So we could see some regulatory, moves to protect a number of retail investors. That's the biggest risk.
You own the leader, NSE, right?
Yeah.
In the portfolio?
So for Whito Group, NSE, of course, which is not a publicly traded company, and of course one of the largest private companies in not right. They're of course absolute dominance, and typically as exchanges tend to be monopolies, and you tend to have very concentrated high market share.
But do you think BSE, and this is one of the points Nimesh was also making, you need, in the US, for example, there are so many exchanges.
Yes.
One exchange does not have a 95-96% market share. In India, you need more than one exchange. That seems to be the general broad push as well. So if the ecosystem grows, do you think an exchange like the Bombay Stock Exchange can also thrive, continue to grow?
No, we've actually had multiple stock exchanges in India. We used to have a lot of
regional stock exchanges.
Yeah, regional
stock exchange.
And BSE, NSE came later. Correct. After BSE. So we always had multiple. And by the way, MCX also, one of the other company also set up there were other exchanges that came up. The problem is liquidity drives liquidity. So investors, traders want to go. So it's a network effect. It's a classical network platform where liquidity causes liquidity to go up. So even in US and all, you have different exchanges, but the liquidity of one product type tends to get concentrated in one industry.
Okay.
Yeah. So you have you can have products, exchanges which are market leaders by product categories, but typically liquidity doesn't get distributed. Sure.
All right.
Okay, fair point. But let's talk about the World Cup, guys. It's upon us, and we're all excited. Are you heading for any match?
No,
Which,
I would love to.
But the stock prices have been excited for a while now. All the ones linked to.
They have. And you know what? I'm going to just go across to the big wall because we have lots that's happening as far as the World Cup action is concerned. So I thought, let me just take you through that. The business of cricket, right? So the spotlight is on the World Cup. After 12 years, we're having India host the ICC World Cup that begins next week. And it will be held in 10 cities across India. The matches will start on the 5th of October and they will end on the 19th of November. It's a 46-day international tournament that we're looking at. Now, I'm going to talk about the numbers that are involved because there are some big numbers that we're looking at. In terms of just ad revenues, both on TV and the digital platforms combined, the expectation is that there could be almost 2,000 to 2,400 crores of ad revenues coming through. Now, if you look at sectors, there are several sectors in focus, right? Almost all flights are booked, almost all hotels are packed where these matches will be held. So Jeffries put out a note where they said that the average hotel rates for match days are up by 150% compared to a week prior to the match day. So that's the kind of hotel rates. Apparently, the Leela in Gandhinagar is selling at 1.7 lakh rupees per night. That is the kind of rate during the match day, that is. The average flight rates are up almost by 80% for select flights compared to the week prior to match day. And the rooms in certain places like Dharamshala, smaller places where matches are held, are completely sold out at the moment. If you just look at the stock performances, right, of these hotel stocks, they've already seen a significant rally. So whether it's Lemon Tree Hotels, Indian Hotels, Chalet Hotels, are all up anywhere between 20, 30, even 60% on something like a Chalet Hotel. If you look at QSR stocks, they're all in focus. Jubilant Foodworks, Westlife, Zomato platform companies have done very well this year already. And then you have the beverage companies, right? They can't be left behind. So Varun Beverages, United Spirits, Radico Khaitan, all looking good. Now in Jefferies, in the note that Jefferies put out, they said that the big beneficiaries of an overlap between the festive season and the World Cup are Zomato, Devyani International, United Breweries and United Spirits. So these are their top picks. But they also speak about how there are certain companies in the television space, whether it's Z Entertainment or Sun TV, that could see a mild strain in Q3. That's because the non-cricket TV advertising is expected to get a hit this time as the spends get diverted to cricket. So that's about the triggers. But let's look at the valuations and how they're stacked up, because the valuations are not cheap by any means. Zomato is trading at 148 times, PE valuations FY25, and the others are not too far behind. United Spirits, Breweries, Jubilant Foodworks at 62 times, and Westlife at 82 times. So, Ramesh, that's the question, right? I mean, we do have this big event upon us, but the stocks have also rallied substantially over the last many weeks and months. Do you think it's a bit too late if investors want to get in now? Do you think they've missed the bus?
I think you missed that question. What she wanted to ask was your view on the hotel stocks or the
QSRs
QSR names out of the World Cup.
So I think hotels is coming out of a very long, large under-investment cycle. Industry is consolidating. So still, I think the returns on capital have to improve a lot for new investments to come in. So I think it's a very long cyclical business. So I think hotels over a longer period should do well in India, because it takes a lot of time to create capacity. And a lot of people create capacity when hotels make tons of money. We are still few years away from. I'll tell you very interestingly, hotel rates in big cities are today lower than what they were in 2007-8. So that is 16, 17 years later. Nominal hotel rates are lower in rupee terms. So that is the potential. QSRs is very here and now. You can open a QSR outlet in 6 months. And food anyway is a large business. Of course, that will all benefit. We're all going to watch matches and order food and all that stuff. So there is going to be a festive environment and everything is going to benefit. But the hotel cycle is a much longer potential opportunity.
But I think the question is how much of it is in the price, right? Because the rally, Lemon Tree, etc., have been big movers this year. Yeah,
so I see the kind of money the hotels make in the next 2 months because of the World Cup, that doesn't add up to much value. Yeah. Really, you're investing in hotel stocks because you believe the business is good. Otherwise, the incremental benefit of the World Cup to the impact on stock prices is much less limited.
Okay.
By the way, Sonia, hospital occupancies also be better in the third quarter because of the World Cup.
I'd rather not watch a match than go and stay in the hospital bed for the night. I'm okay watching it.
But it's true, right? I read in newspapers that it's happening.
People are booking hospitals because they're not getting hotel beds here. So what to do? They want to see the match.
That's a frenzy.
The interesting story I've heard from medical insurance guys that the industry is worried that because of the World Cup, they're going to get a lot of these fake claims. Where people said, I'm not feeling well and I got admitted because I wanted to actually want to stay watch the match. So the industry is actually worried. That's the feedback we're getting bottom line.
You'll see him in the crowd cheering, and in the night he'll be sleeping in the hospital.
No, my team lost and I'm not feeling well.
All right, let's do one thing. Let's take a short commercial break. On the other side, the other big talking point has been the impending US government shutdown. It's expected to come through on the 1st of October. Is it an unwarranted threat? And what do you do? How do you read it as a trigger for the markets? We'll talk more about that in a bit.
पंजाब के क्षितिज पर एक ऐसे सूरज